Welcome to Caliente Topics. My name is Veronica Russell from MMTAXMAN.com. I have Patrick Russell, EA, from MMTAXMAN.com as well. Patrick, good morning. Today's Tuesday, and what's the topic for today?
Happy Taco Tuesday to you, Veronica. Today, guys, we're going to be continuing the conversation on owners of companies that want their company to pay for their health insurance premiums for themselves and their family. Now, the first conversation we had was the more standard and older approach for owners that run S corporations, right? Those that have to wear two hats in the company, not only the owner stockholder, but then also officer/employee. We already discussed how the health insurance premiums paid by the company first need to go through the payroll paycheck before it can be deducted as a self-employed health insurance deduction on page 2 of the 1040 Schedule 1. Now, as an adjustment to income. Now, what about the LLC member? What's great about the LLC member is that they're treated as a partnership in the IRS code, which means that they only wear one hat, and that's the owner. Now, in any partnership, you basically split everything to include income, expenses, and credits of whatever kind based on your ownership percentage in the company. In most cases, let's say a 50-50 split, right? And so that takes care of your income, right? Yep. Whatever is left at the end of the year as a profit from the company, that's considered your income for the year. And also self-employed income, which means it's your earnings. Why are you telling me about this? Is because as an LLC member who is excluded from being called an employee, who's actually excluded from cafeteria plans like the 125 because they're not designated as employees. But it does make it a whole lot easier for the smaller companies that are LLC taxed as a partnership to handle their health insurance bill. The company takes care of the bill and simply books the health insurance premium payment to a guaranteed payment account. A guaranteed payment account is simply money that's paid out to a individual member for either services provided or some type of capital reimbursement for what was provided to the company. It's considered part of the income for the member at the end of the year. Does get reported on, for you wonks out there, do-it-yourselfers, the schedule.
The K1. It is reported on a K1 that floats over to your personal income tax.
That's right. And line 448 specifically. So now, the big deal about it is that because you only wear one hat in the company, you don't have to worry about those Obamacare discrimination rules where you have to worry about group health insurance or a shop plan from a covered California or a marketplace exchange. Because you yourself is not considered an employee, covering yourself as a member, as an owner, doesn't count against that one employee exemption that you have before you trigger all those Obamacare regulatory issues as far as discriminating against your other employees. Okay, so for smaller companies, kind of a little loophole workaround that makes it easier. So what happens is that the companies make the monthly payment to the insurance company and the premiums. They then get added up and added on to the members' schedule
K1
at the end of the year. Keep in mind the Schedule K1, that is like the income statement document that comes through from the partnership LLC tax return form 1065, reporting that individual member's share of the profit and loss to include the individual guaranteed payments that were paid out directly to that member, including those health insurance premiums. Now, is a member, softball question number 2, is a member considered a self-employed individual on the Form 1040?
Yes.
That's exactly right. So it's similar on the back end. Sure, the K1 will include those health insurance premiums as income on the top end to be reported on your Schedule E, page 2, and it'll flow through onto line 17's Form 1040. But they get backed out, don't they? It gets reduced out by the self-employed health insurance deduction, which you will find on your page 2 of the 1040 on the Schedule 1, guys. So makes it a lot easier on two fronts. One, the accounting is a little bit easier, a much more direct path on the bookkeeping. Yeah. The guaranteed payments do get backed out, similar to the S-Corp owner's salaries being backed out as a self-employed health insurance deduction, which then, of course, leaves behind what? Remaining the actual profit from the K1 Income LLC that now is being taxed as self-employed income to the member. And that's how it's done here. Any questions on that?
Nope.
Very good,
Pretty
guys.
clear.
Hey, a quick way to get a quick answer is by using our comment box below. Don't just subscribe to this channel, even though we will be doing this pro bono tax workshop on a daily basis, but lend your voice to the show. It'll make it a whole lot more fun. Guys, have a great day. We'll see you tomorrow. Oops.